Hi everybody, welcome back to another video. KIT results is finally out. For those who are new to KIT, they are a business trust which consists a lot of essential properties such as utilities, wastewater treatment plants or renewable energy assets. Unlike REITs, they do not have to give 90% of their income as dividend, which thus giving them the flexibility in utilizing their cash. If you are new to KIT, you can watch my previous video where I give a more in-depth analysis on their assets here. Let's get right into their results. DPU and distribution income-wise is at a historical high of 6.19 cents, which equivalent to 12.3% dividend yield at the current share price of 50 cents for the whole year. However, this includes a special dividend of 2.33 cents during the third quarter. Removing it will be 3.86 cents, which equivalent to 7.7% dividend yield, which is still not bad. Later in the video, I will break down their individual assets earnings per quarter for us to analyze on. I have mentioned a lot of times about KIT previously. I am very excited with this new management team aggressiveness in investing in cash flow generating assets. In the long term, this would definitely benefit the company and reward shareholders. So far, the assets that they have purchased have performed quite decently, which I will show later, with the recent one being the German solar portfolio and a large acquisition of the largest bus service in the state of Victoria in Australia. Although I do not really favor bus services assets, overseas bus service assets might be able to perform well considering they are the largest. So we will have to observe and see what will be the performance. Another good news is that the Senoko waste-to-energy plant managed to secure concession extension. It's not only up to 2 years but up to 4 years with the government. This is definitely good news because this waste energy plant is a very stable and good asset for KIT to have. So therefore, having this extension would guarantee it for the next 4 years. Another exciting news I'm still waiting for is the buyover of the 50% of Marina East desalination plant from their sponsor Keppel. Why is this so important is because they will hold a 50% stake, but they will take 100% economic benefit. This will definitely provide KIT with a lot of benefits and cash flow. And this is a typical example of why a good and strong sponsor behind the business trust is important. Of course, we are still pending on the PUB approval, which hopefully will get approved soon. If you have enjoyed the video and have been informative so far, please support the channel by hitting the like, subscribe and comment on my videos on your feedbacks. Thank you, and let's continue on with the video. So let's look at their assets distributable income. Because they do not show Q over Q comparisons, I've helped to break them down. If you notice, for quarter 3, it did not perform that well. However, for Q4, it has improved quite well, especially with the newer assets, Aramco, BKR2 and the EMK giving much needed support to the rest of the assets. Of course, it's quite impressive considering KMC contribution was totally negated to pay down debts. Hopefully, subsequent quarters we will be able to see the new assets start contributing more because more distributable income equates to higher dividend for us shareholders. If you look at the new asset performance table, Aramco gas pipeline is still number 1 with the best ROI of 14.36%, followed by BKR2 with 11.82%. I'm hopeful that EMK will start performing well. As you can see, this quarter they came in at a high of 7 million compared to the previous quarters. In the next few quarters, we can see how the newer assets would perform and take note of their return of interest as well. Buying assets is good, but buying the right assets is definitely more important. So we will continue to monitor on the performance of the management acquisitions. Next, let us look at their debts. They currently have a leverage ratio of 39.9% with interest coverage ratio of 2.8 times, which I took from the full financial report. at the interest rate of 4.25%, it's quite impressive on their interest coverage ratio. If you see this ICT for medium-term loans is at 14.7 times. This means that interest of these notes are so cheap that their income is 14.7 times of the interest required to be paid on these medium-term loans. What I understand is that the refinancing during Q3 was so good, therefore allowing them to give special dividend. For the financial year of 2024 and 2025, they do not have much loan to refinance, therefore making them more resilient to any risk of interest rate hikes. But to be honest, looking at the inflation data in the United States, I'm confident that the Federal Reserve will start cutting interest rates. This will be a big boost to Singapore REITs because Singapore interest rate also follows from the US. So if the US interest rate drops, Singapore REITs will definitely benefit with a lower interest on their debts, thus having more income to distribute to shareholders as dividend. With the new asset purchases, the minimal contribution of KMC do not affect the overall income as much anymore. Of course, it would be best if they could do another refinancing that would benefit both the company and the shareholders. Overall, I'm confident with KIT and excited about their future as long as they have the right management. With the slightly higher dividend of 1.29 cents per semi-annual, we can expect the dividend yield to be 7.7%. Of course, if their assets continue to perform well and DPU increases, it will be additional bonus for shareholders. I hope you like this video. Please hit the like, subscribe and comment how you feel about the prospects of KIT or Singapore REITs in general. You can also watch my other videos here where I talk about the REITs that would do well for 2024 and other REITs analysis as well. Thank you and to the next video.